moves in some key asset classes today. Gold up almost 1%, setting its 45th record high of the year. Silver jumping nearly 3%, topping $35 for the first time in over 12 years. Meantime, yields continue their trek higher, with the 10-year crossing 4.2% for the first time since late July. Let's get more on this move in rates with Rick Santelli. We were just debating this here on the desk yesterday, Rick, what the move higher means. What do you think?
Well, it means the election's close, and many are concentrating on areas of debt and deficits, areas that neither candidate, at least during what I call a Santa Claus period, are discussing. Now, we all know before an election, many candidates like to promise the world, and we also know that after the election's over, pretty much the promises will disappear. Congress probably won't pass most of them, and the politicians will get back to the same type of work they were doing prior. Now, one big issue is, if you recall, 1 year ago today, we were hovering about 5% in a 10-year. So we've seen that every now and again, a little bit of fear comes into the realm of fixed income government trading. And with all yields going up around the globe, all I can say is that the U.S. has a huge spending problem. The rest of the globe is pushing debt out, China, EU, the U.S., and there's going to be a competition, which means in order to find enough demand for the ongoing onslaught of issuance, we're going to have to find that appropriate yield that garners added interest by investors. Where will that yield be? I can't tell you. But as you look at a chart of 10-year rates going back to the early 1960s, going from 5% to 15% can happen pretty quickly.
I understand this notion of competition because of all the debt issuance around the world, Rick, but really there is no competition when it comes to the quality of debt the United States offers for sale. And so this only really matters when the buyers step away from the market, right? And so have we seen that in recent auctions? Are we getting indications of that? I mean, we know, anecdotally that China's... Okay.
I don't agree with that presence.
Okay.
I don't agree. I think there was a point in time where the U.S. paper was undeniably fantabulous. And I'm still saying that it's better than all the rest, but it's nowhere as good as it used to be. Just consider, in 1970, foreigners held about 5% of our debt, and 95 about 23%. Now it's about a third, okay? Which means domestic accounts own 2/3, and it's our Fed that owns 1/3 of the 2/3. See, the real issue is that our quality, our spending, our policies, our financial culture in the U.S. today is dramatically different than many of the times you're alluding to. Yes, our debt is still the best. We still have the reserve currency, and I don't think that'll change. But none of those are as good, as solid, or as financially perfect as they were a generation ago.
Rick, you've been doing this a long time, and I'm not looking to tee you up, but I don't remember if it's ever happened where you've had a rate cut of that magnitude, and then almost to the day, you've seen bond yields move the entirely different direction to the level that we've seen over, I guess, now a month since they lowered rates. So speak to the unprecedented nature and what you think it means maybe to equity markets.
Well, I think it's investors, which we call the market, are pushing back on the notion that central banks are the mighty force in the universe. Certainly they can get away with a lot, but they can't muscle up all interest rates. And I continue to use the analogy of a water balloon. Central banks could squeeze it where they want, but we're in a day and age where it's going to pop out somewhere else. The market is showing that it may take more yield horsepower to move the paper. And I continue to say that it isn't only that aspect. It's about policy. All the debates that we seem to be having are about tax policy. Listen, for other than leases and little trinkles, the government basic money comes from taxes. So there's so much money in the country. Now, if the private sector spends those monies, that capital, I think it's much more efficient than the government. So when we talk about more taxation, what we're really talking about is more control over what Americans make spent by the government. That doesn't make any sense to me. And if you draw a line of spending, it is grossly outpacing revenues, and revenues, for the most part every year, continue to make records. You talk about the tax changes in 2017, 2018. Look at what revenues did. They went up. The problem is that our baseline spending goes up every year on automatic pilot. And in welfare, we have unlimited spending. You know what the issue is? If you want our debt to find more buyers, we have to change our policies and quit spending so much more than we make on an automatic pilot system.